Hey, good morning, everyone. It's Coach Chris from MNQ coming at you Saturday morning, September 21st, 2024 at about 8 in the morning Central Daylight Time, actually 8:20 Central Daylight Time. I want to thank all my new customers, all the people who subscribe to my videos. Really appreciate it. I had a busy week last week. It was homecoming at my daughter's school, and so we had a lot of activities related to that, and I bought a new piece of real estate that I have to rehab, and I'm working with contractors on that, and so I'm really been stretched, and I apologize about not getting more content out, but hopefully things will settle down this next week, and we can go forward. What a week it was in the market. I did trade every day as best I could, but I was very distracted and missed a lot of opportunities, blew a lot of opportunities. I'm human just like the rest of you, and man, this was not a week for not a week for the weak-hearted, let's just say. Oh, before I go on, I want to just make the quick disclosure, government required disclosures, that I'm not a financial advisor of any sort. I will not give you specific financial advice. I will not trade funds for you. I will never ask you to trade funds. The government disclosure links are in the description below. If you want more details, just click on those links. Okay, so the chart I have up on my screen right now is the Friday MNQ Z contract, which expires in December. We transferred over to the new contract on Monday. Of course, on Wednesday, we got the big rate announcement. Then overnight, Wednesday night into Thursday, we got the big reaction, which was a huge push up, like a delayed reaction. And so it was coming into Friday, everybody was really wondering what was going to happen. And we did get a few fireworks, but we got some really unusual price action as far as I'm concerned. Very unpredictable as far as the other thing that was happening yesterday was the what we call the global OPEX, and what it meant was there was a lot of options on stocks and other equities that were expiring yesterday. And what happens in the markets is the options market makers have to not manipulate, even though it appears to be manipulation. It almost is manipulation. But they have to pass off their risk of potential financial hardship by hedging. And one of the ways they hedge heavily is using the futures market. And that's where you'll see this big institutional money come into the market that can really drive the market in one direction or the next. And at times also it can be very rapid. When it's smooth, like you see here, very controlled up and down, it's not bad. And these are probably some type of algorithms that are running that kind of keep things in check. But then you'll see here, and I'll get into this in a little bit more detail, what happens when the actual markets open and now the retail traders start to trade. You can see this price action all over. And so this, if you are trying to scalp the market, and by scalping I mean get in and out quickly with a profit, you can see this is a 1 minute chart. You can see here, okay, let's just eliminate that opening candle. I'll talk about that in a minute. But you can see here how quickly things can change. And if you get off sides or in the wrong direction on this market, you can lose money in a quick hurry. And so I'll talk about that in a little bit. So the indicator did all right yesterday. Not the greatest I've seen it, but it kept us on the right side of the market for the most part. You can see here, and I'm going to go back pre-market to 640. We got our first initial buy signal triggered. Remember, I don't advise trading more than 2 hours pre-market. And so for me, that's 6:30 a.m. Central Time. And you can see here, we got triggered into a buy. The red X that you see here is the system telling you that's the first suggested take profit. On the shorts, it will be a green X that'll appear on your chart. And that's where the algo is saying is a good place to take your initial profit level. Now, if you're trading more than one contract, for you advanced traders, what you can do then is take one contract off when you get that signal, and then leave a remaining contract on and run and just aggressively trail the stop up. And look what would have happened with this. That initial take profit is around 13 points. Now remember, we're on the 1 minute, so we're not seeing the huge moves on the 1 minute triggers like we would in the past. But having said that, you'll see this one does go on to up to 50 points here, and then ultimately 80 points there. Now that's a long time, obviously, to be in a trade. It's over an hour worth of trading. But you can see here, you never really were at any risk of losing money. Say you entered here. Let me just draw a horizontal line down there just to give you an idea of these levels, because these charts can always be deceiving. You have to really look at things in many different ways often. Okay, and let me make that a little bit wider so we can see. Okay, so say that's the level. I can even move this up a little bit. Even if you entered, no matter where you entered on that candle, you'd be okay. It did touch it if you entered at the top, but let's just assume you still gave it a little bit of leeway. Let's just say you entered at the bottom of the candle. So you enter here, you can see you never were in any real risk of getting stopped out or going negative on your trade. And if you just trailed this thing up, there was obviously this pullback here. I mean, it's not huge, but from the high point to the low point, it was only about 15 points. And then it continued upward all the way up here till around 10 minutes to 8 my time, which is Central Time, way up there. So which ultimately would have been an 80-point trade. Now, let me show you one other nice thing about this indicator. You can see here this gray cloud, what I call the cloud or shadow, however you want to, with this red basis line in the middle. The red basis line is like a neutral price level. Price does want to stay as close to that line as possible. And so what will happen is, as price gets further and further away from that basis line, it will want to retreat back to it. And you can see here, what happens is, we go up, we have a nice push, we have a little consolidation and retreat. And you can see here, this particular candle just barely pierces through and touches it. This candle, I don't think, ever touched it. And so what happens is you get that initial push up. In this case, it's about 10 to 15 points. Slows down a little bit and retraces. And remember what I've taught you about this. The market, let me just do this using a line, because this will help illustrate it. The market never just goes up like this, okay? And just straight up. It can't. The market goes in a zigzag fashion. It'll go up. It will pull back. Now, it's not going to be exactly like this either, but it'll be similar to this. And then it'll continue on going up. And that's what you'll have, is a series of these. And so if you take and you would superimpose this down, let me just see if I can do this. I can't move the whole thing at once right now. I don't have it set up for, and I'll just show you what I'm talking about. So here's the pullback. Now I had the angle a little wrong. Obviously, I can adjust that a little bit, but I hope you'll see what I'm getting at. Okay, and so that is what the market is, just a series of, and the chart, remember, is just a illustration of the actual way the price moves up and down. We have a high, low, the body is the open, this is the close of the candle, and the wicks were the upper level. But if you start to think of it, rather than look at the little minutiae details of these changes, especially on the short time frames, it may help you when you're trading to look at the overall picture rather than just the short-term picture of what's happening here. So we go up, we pull back. This gives them the energy then to relaunch. Then what happens here? The same thing. Now remember, it's not a straight line, but if you visualize it as such, it may help you not to get all caught in the fray. We pull back, we push up. We pull back, we push up. And what happens is, if these pushes up, these impulse pushes up, become shorter and shorter, like they do here. So here you'll notice nice long one, pull back, a really nice long one, pull back. Now we're getting shorter and shorter with the pullbacks to the pushes up because they're getting exhausted. They're running out of steam. And eventually at the top, they no longer can pull back and get enough energy. They have to move the market back down at some point to to get more energy. This is what we call the accumulation phase. It's on a push up. Then it will pull back. Eventually it will top out and it will repeat. Then we go through the distribution phase, goes down, picks up liquidity, and repeats. So it's like a cycle. And it's hard not to get caught up in these minutiae because if you're trading, let's say even on a micro, this is $40 on your bottom line sometimes, this up and down motion. So that's why you can't get caught up. You have to look at the overall picture more so than just these amounts of minutia. So let me just bring this back down to get you an idea. Now I'm running late. I want to keep this video under 20 minutes if I can. So if I end the video abruptly, that's why. I just want to put a limit on here. But let's just look at some of these trades. So then now we're at 8 a.m. and we get a push down or a entry single to the downside. Now, the other thing I want to talk about real quick, because this is very important. This cloud on this system, what it does is it expands and contracts based upon the amount of volatility. So you'll notice here, it narrows down. There's not a lot of volatility, but then as we're increasing, volatility is increased. So this cloud broadens out. You'll notice that price is staying even above that cloud. So we know we're fairly safe. Normally, the further away from that cloud, we're really in a nice movement, either up or down. The basis line, as long as we're above that red basis line, we're good to go. As soon as a candle closes, in this case on an up trade below that basis line or on a down trade above that basis line, any part of the body, like here, see how the body of this one candle closes actually below that red basis line? Get out of the trade. Whether it goes on without you or not, but that is a sign to get out of the trade. Okay, once it hits and goes through that basis line, if it just wicks it, that's fine. If part of the body goes through, I would be on high alert. But if it closes below any part of that body of that candle, get out of the trade. So we get triggered into a low, or a sell rather. Get a nice first take profit, 33 points, second take profit, 50 points. Beautiful. On a 1 minute chart, beautiful. Remember, our stop loss goes at the bottom of that cloud, which in this case would have been a 8-point stop loss. No problem. No problems at all. And then you would either have gotten out here, let one ride, get out at the second take profit. We then consolidate. Remember, the open of the market is coming up quickly. We get triggered 4 minutes before the open into a long. Very dangerous trade, remember, getting into a trade. But momentum is shifting up. For those of you that took it, you could have got 50 points, ultimately some more. But look what happens. This initial candle at the open pushed up, but then look what it did. It retraced way back down. So that was, and it happened very quickly. Remember, this is a 1-minute chart. 15 points. And you can see here how the chop began and all of this uncertainty. Then here, you can see here, we had a losing trade. It triggered down, but there was no momentum. I shouldn't say a losing trade. We just didn't have the momentum. So depending on how you manage that trade, you may have been able to make a little bit of money from here to here, or at least hopefully broke even or taken a slight loss. But you hopefully would not have gotten hurt too bad. Let's just say if you got in, worst case scenario, that would have been a 20-point loss. Then the same thing happens here. This candle was much bigger, and this one did continue on a little bit, so hopefully you wouldn't have gotten stung, but you can see how quickly with this type of market activity you can get false. The indicator can only detect the momentum at that moment. It cannot detect what's going to happen on that next candle, whether that momentum is going to continue on or they're going to reverse the market on us. We don't know that, and we cannot control that. Those are the risks, the inherent risks. You're not going to trade at 100% level. The object is to be right more than you're wrong, to know when to quit, and then when you are right, to extract as much as you can from the trade. And you want to be knowing, as long as you're right more than you're wrong, and that you're extracting more from your winning trades than your losing trades. When you're wrong, you keep the loss to a minimum. When you're right, you maximize, and you win more than you lose. That is a recipe for success. This was a nice trade here. This was around 9, almost 10, 9 o'clock, just before 9. And I did catch this one. This was a really nice trade, 50 plus points. Really nice, but you can see how quickly. Look at this big candle retreating back to that basis line. They got it too far away from that basis line. They wanted to retreat back. No problem here, just these wicks touching, but you can see here this body closed below it. So you're out. Triggered into a long, it went absolutely nowhere. Retreated, a short, went absolutely nowhere. A long, you got a little bit maybe out of this one, 18 points. But here's where the fun started. At 9:45, we got triggered into a down. And it kind of surprised me how they pulled this thing back as much as they did. 130 points. First take profit, like 80. So look at that beautiful trade, even on the 1-minute candle. I mean, this was insane. Boom. There's our 100 points. AccuTrader.net 100-point system. Boom. Trading 1 micro, $200 to here, 270 on that one beautiful trade. Then we got a long that was, in my opinion, terrible, because it went on, it pulled back, went up, and it went on from 10:30 in the morning until noon. So an hour and a half. I mean, if you had the balls to stay in this thing, you made a lot of money. I just took the initial push from right about here to here. Yeah, I got 50 points out of it. Right to there is 70. You can see how it, remember how I explained this morning. Goes up, pulls back. Goes up, pulls back. Goes up. Now you can see the pullbacks are more infrequent. We're running out of steam. There's 100 points, pull back. 110, pulls back. Ultimately 125 points to the upside. Now, I forgot to also mention something when I was talking about the zigzag pattern, the up, pull back, up. The opposite is true going down. You'll have a down, pull back, down, pull back, down. But it's the same basic concept, just in reverse. Here, boom, pull back, boom, pull back, boom, pull back, boom. So that's the way we want them. Nice trade here, real quick, boom, 20 points. Little trade here, not huge, boom, almost 20 points. Really nice trade here, boom. We're now at 1 in the afternoon, 60 points. I had to meet a contractor at 11 a.m., and I stepped out. We were on that huge uptrend, and I had to leave for about an hour. Well, I come back, and the market had pulled back. Look at this nice trade. Even on the 1 minute, boom, 60 points. Consolidation and garbage. Stay away from that. Also, once it starts to get about 1:30 in the afternoon, you need to be very, very cautious. Look what they did. They ripped this thing back up. Boom. 130 points. Pulled back, and then at almost 3, right before the close, they decided to sell the thing off again. Another 50 points. So what a roller coaster ride that was. I hope you stayed on the right side of it. What I'm doing lately is, rather than, because I've been so busy with projects, I'm done trading between 11:30 and 1:30. I don't want to trade anymore. Not with the market conditions. Look at what happens. It's too stressful, especially if you've been able to lock in a profit early in the day. Don't be afraid to walk away if you're up $300 to $500. Folks, that's a lot of money. You know, we get, I don't know what the word is, but we are so lucky to be in the positions we're in, where we can make, incredible amounts of money in a short period of time. And it's easy for us to get lost in the overall picture with all the streamers out there making $2,000-$3,000 a day. Hey, you could make $2,000 a day very easily, making $300 through copy trading. This is ingenious what we have here. Why take the risk of going for one $2,000 trade when you can make the same amount of money? Let's just look at this. Say you make $100 a trade and you copy over 5 accounts. That's $500. That's 10 grand a month, because we have 20 trading days typically in a month. Okay, making $100 on only 5 accounts. Okay, now you go to 300 times 5. That's $1,500. That's 30 grand a month, folks. Come on. That's huge money. My wife is in the healthcare industry, and there's doctors that are making that kind of money, and they have huge overhead and huge schooling cost and time and stress. They're putting in 8-10 hour plus days. So really take advantage of what we have and be smart. Trade smart. Don't get lost in all the hype and the BS going on out there. Just stay grounded, trade smart, lock in your profits, and the rest will come to you. So that's my rant of the day. Sorry about that. I went way over time on this thing. So I do sincerely appreciate all the people who've been buying my indicators and watching my videos and liking my channel. So I'm going to have some more videos as I have time over the weekend, some more words of wisdom, working on some big projects. I know I keep saying that, and I am, but it takes a lot of time. I'm not going to release garbage out there. There's too much of that already. And I'm not gonna release something that hasn't properly been tested and can be shown to be proven in actual real world, not just back tested on some, using historical data. That to me isn't accurate, because you're not getting realistic fills, you're not getting realistic exits. It's kind of black magic in a sense when the people say, well, I back tested this and got a 90 point some percent win rate with a 2 point something factor. Yeah, right. You know what I mean? Maybe you did in your back testing, but let's see you trade it in real life and get those results. And anything I put out I'll have the data to back it up and show you exactly in real trading conditions what it can do. So have a good one, everyone. Coach Chris out.